Real Money contributor Dan Dicker is here with his take on what we heard from the IEA this week about oil prices. Dan, this is the annual World Outlook report they put out, and the headline was that oil will get to $80 a barrel eventually. It's going to take a while.
Right, 2020, and in fact, I always look at the IEA predictions as much of a comedy show. They've had a horrible record when it comes to these projections. In fact, according to a projection 3 years ago, we're supposed to be at $110 crude today. So shows you how badly that they tend to get this stuff.
And your point is, if that scenario occurs, there's going to be a lot of companies not around anymore.
Yeah, I don't think there are any companies, any oil companies that are around anymore. What's going on right now at $45 oil is, quite frankly, that everybody in the industry is going broke. The question is, who's going broke quicker? That's all that's happening right here. Now, what the IEA does is it takes just production numbers and they extrapolate them out over the course of several years, but they don't take the economics into account, and something necessarily must change if oil only gets to $80 in the next 5 years. It's just not enough to sustain the production that we're seeing, and in fact, you're going to have a collapse, not only from U.S. players, but from countries themselves. Venezuela won't survive, Nigeria won't survive, the Russians are going to have a real problem, the Iraqis are going to have a real problem. There are countries out there without, even if they have break-even numbers that are below $80, that will not be able to sustain their governmental budgets with oil prices that low for that long.
So what's a better guesstimate? Do we even know? I mean, if we look out to 2020.
Do we know? No, we don't know, but that's my job. I love making these kinds of predictions. In fact, that's how I make my living for 25 years, is predictions on oil prices. And my belief is that at some point, we're going to see the collapse in oil companies, the consolidation that's needed, and the drop in productions that's going to drive the next oil boom. In fact, I'm on the opposite side of the IEA, and I see prices that breach $150 a barrel by the end of 2017. Now that's quite a bit different from what the IEA is looking at.
That's huge from where we are now.
It is, and it's even harder for people to believe. I know that, because when things are down, you never expect them to go back up. Just when things are up, you never expect them to go back down. This is something that will surprise, and in many ways, that's really the story for the next several years, is how much of a surprise that oil boom is going to be for investors and everybody else in the space.
So if that's the case, the E&P stocks are fine.
Well, what it is that you have to be very careful on who you select, because inside of this bust cycle that's going to continue for at least another half year to a year, you're going to have a lot of these E&P players that are actually going to go out of business, are going to get sold, assets are going to get lost, they're going to get restructured in some way. Those are the ones you want to avoid, and you want to be in the ones that you think are going to survive this and are going to make it to the next boom cycle so that they can profit from those three-digit,
Are you going to drop
triple-digit
some
oils.
names for me?
Well, sure. I mean, I've dropped them before. Cimarex, EOG. There are a couple of others that I really like. I think Hess will be one of the survivors, Anadarko. These are some of the names that I like.
Dan Dicker, good to see you. Thanks. I'm Rhonda Schaffler for The Street.